Welcome back. You're with us on Corporate Radar, and let's quickly get to the next company that's on our radar. Shoppers Stop last week signed a strategic distribution partnership with the Japanese beauty leader Shiseido to launch global makeup brand NARS Cosmetics in India in the second half of 2023. Remember, Shiseido products are currently available in India on Nykaa as well as on Sephora. To understand the opportunity and expected sales and, of course, business plans, the rest of the business, we have with us Venu Nair, Managing Director and Chief Executive Officer at Shoppers Stop. Thanks very much, Mr. Nair, for joining in. Good to have you on the show this morning. So first things first, is this an exclusive agreement that you've entered into, or will these products continue to be available on these other platforms, Sephora and Nykaa? And how do the business dynamics, the margins, how does all of that work out?
Good morning, and delighted to be on the show. Shiseido has entered into a strategic distribution partnership with Global SS Beauty Brands Limited, a 100% subsidiary of Shoppers Stop. So under this partnership, Global SS Beauty will distribute Shiseido Group's global makeup brand NARS Cosmetics, which is headquartered in New York. And it will be this brand that we will be bringing into India. And that is on an exclusive basis. Under this agreement, the Global SS Beauty will distribute NARS Cosmetics to various retail outlets, including Shoppers Stop, as well as e-com marketplaces. And what it does is obviously the wide network and the strong omni-channel presence that we have will serve as a springboard for NARS and will allow the launch at a much faster pace into the country.
They won't be available on the other platforms. Can you clarify that once this agreement kicks off with Shoppers Stop?
Yeah, it would be available in Shoppers Stop as well as on other retail outlets or platforms, as depending on how the agreements would get into play.
Mr. Nair, good morning. I think, my colleague's question is relevant because, I'm a consumer of NARS Cosmetics as well. I'm really glad that it's finally come to India. But I would rather sit in the comfort of my home, order the NARS product on, say, a Nykaa or any other platform, right? Rather than sort of making that trip to Shoppers Stop. So that's the question. If you can tell us, how much does Shiseido do in India already through Nykaa and Sephora? And do you think that it would be sort of some kind of a clash because of these products already available on the e-commerce platforms?
So NARS would be available in Shoppers Stop as well as on shopperstop.com and ssbeauty.in, which are all the omni platforms of Shoppers Stop. Apart from that, of course, it would be at the right time available on other platforms, whether it is Sephora or the other marketplaces that we would want to be in. What it does do, and I must just clarify, Shiseido even today is available in Shoppers Stop, has been in Shoppers Stop for a number of years now, and it is available across a number of outlets, along with Sephora, etc., as you mentioned. So it's not a conflict of interest. What it does is it enables Shoppers Stop to strengthen the beauty pillar for us. Beauty is a growing market. The scope of increasing consumption in beauty gives us a great opportunity to expand our own portfolio. And by entering into this exclusive partnership for NARS to India to distribute the brand, what it does is it allows us to bring in some of these global brands, which is our commitment to our customers, to bring the best global brands in the beauty space. And this is one step in that direction.
Okay. And I assure you, your customers are very happy with your decisions. But, just coming back to the beauty business, in the growth that you saw in the beauty category was, I think, 18% in the quarter gone by. And you've reported sales of around 230 odd crores. What is the average growth rate that you're looking at next year? I also ask because there is so much competition in this space now, right? With Reliance launching Tira as well. How are you combating competition on one hand, and what is the sustainable growth rate that you see for beauty?
The luxury beauty market, and that is the space that we occupy. We are in the luxury and premium space, and all of the players, all of the retailers and brands are still fulfilling only a fraction of that demand. Hence, the opportunity and the headroom available for retailers like us is quite immense. not to forget that this is also a market which is expanding quite rapidly. So already there is a large market and it is expanding further. And hence we believe that there is room for growth for all players, including ourselves. And I must place on record the fact that we are the largest players on beauty in the physical space. We are the number one when it comes to beauty in retail, and we are building on that strength as we augment with further global brands and expand our portfolio.
Mr. Nair, good morning. Prashant here. Could you tell us what is, for the beauty segment, what has growth rates been on a CAGR basis, say last 3-4 years? What do you expect growth rates to be going forward? Because there's huge amount of competition, right? Existing players have ramped up, newer players are entering, some very large conglomerates are coming into the space, have come into the space. So just your assessment of past growth rate and what you expect from the segment.
So beauty as a category has been growing at a double-digit CAGR, and we expect that to continue. Reiterating the point that has been made a number of times earlier as well on this show itself, if you look at the per capita consumption of beauty in the country and you compare it to developed economies like the US or even China, we are anywhere between 1/10 to 1/20th in terms of consumption. And that's the reason that opportunity for growth is significant. In a way, beauty is the market for beauty and the awareness for beauty is just starting to happen in India at this pace. And it is still at a phase where customers and consumers are discovering beauty, are understanding about beauty. There's a lot of education that is happening. And as that happens, customers understand the uses, the benefits, and the options that are available. And that's what consumers and customers will look for. And which is where we see an advantage, we see a huge opportunity. And that's why this growth that we are foreseeing for ourselves and for the market itself.
Oh, Mr. Nair, thank you very much for your time. We've run out of time, but we'd love to talk about broader growth trends beyond beauty as well with you next time. Thank you for joining us this morning on CNBC TV18. Now, Nazara is the next company which we're speaking with. This is with regards to the Silicon Valley Bank collapse fallout. Two of Nazara's subsidiaries hold cash balances at Silicon Valley Bank, like many other companies here in India do, especially on the SaaS side, etc. The exposure for Nazara via these two subsidiaries is about 64 crores. Remember this morning, we got the announcement that the government has stepped in to ensure that all depositors are protected, not just at that $250,000 limit threshold, but I mean the full thing. Nitesh Mithir Sen is Joint Managing Director at the company. He's joining us right now to take some questions. Nitesh, good morning. Good to have you with us here. Thanks very much. What's the status at your end, Nitesh, if you can tell us, with the 64 crore exposure? Have you heard anything from the bank? Just tell us the latest.
So as you know, we made a exchange update yesterday, disclosing our exposure of 64 crores through two of our subsidiaries, Paperboat and Kiddopia Inc. and DataWorks. So I think a couple of aspects to mention from a Nazara perspective. One is both these subsidiaries operate with businesses in the US, which is why they had accounts with SVB. But at the same time, both companies for us are very profitable businesses generating positive cash flows, have enough and sufficient working capital besides these funds, which were really free cash parked over there. So none of the businesses are impacted, none of the operations are impacted at all for us, and business continues as usual. We obviously are very hopeful that we want to recover these funds at the earliest. And the overnight statement by Senator Yellen saying that the government will kind of, ensure that all depositors are covered, not only the amounts covered by $250,000, but beyond that as well, gives us a lot more hope. But it's a fluid situation, so we will continue to monitor it over the next few days before we go back with an update to the market officially.
Will you have to take any kind of haircut, you think?
Originally, our understanding over the weekend was that there will be some sort of haircut, but the statement that has come in overnight, makes us a lot more confident that we could probably recover 100%, of the deposits. But again, like I said, this is a very developing story. We don't understand it so well ourselves, so I don't want to make any commitment of
Sure.
getting on this back at this stage till
Okay.
we are very
All right.
clear.
So you're saying that, so you're saying that you may recover 100%, but you're not sure just yet. Just want to understand what was the reason for which, a lot of companies like yours, a lot of startups, perhaps tech startups, preferred SVB as a lender. Was there any advantages that they were offering? Just trying to understand why it's so heavily skewed in that favor, in that sector.
I think they offer, especially for international companies like ourselves and our subsidiaries, much faster onboarding and on-ramping, for accounts. And given that they have been a top 20 US bank, there's a lot of confidence. There has been a lot of confidence in the past that it's a strong bank where, we can deposit. So I think easy on-ramping, easy account opening, and the fact that a lot of the tech were using them for a really long time, it's been around for 40 years, I think gave us the confidence to park money over there. This, of course, took us by a lot of surprise. And going forward, we will also ensure what else we can do to ensure that, we don't get into such situations again.
Nitish, just a couple of questions. First of all, on these two subsidiaries, typically, what are their working capital requirements like? As you said, it's a developing story. We understand that I think Monday onwards, depositors will have access to at least some of their funds. Your total exposure is around 64 crores. Are these two companies in immediate day-to-day need of funds?
No. So if I were to drill it down a bit more, right, Kidopia Inc. is a subsidiary of Paperboat Apps, which is our subsidiary of Nazara Technologies. And they have more than sufficient funds to meet the working capital. They also largely operate in a positive working capital cycle. So I think there is no issue whatsoever. And same goes for DataWorks. That's a smaller exposure of $1.3 million, approximately, 10 crore rupees, and very easily manageable by the subsidiaries themselves. So the point is, even Nazara does not need to step in to support these subsidiaries at this point of time.
Okay, that's an important clarification that Nazara doesn't have to provide an immediate backstop. The other is, this is exposure at SVB. Nazara and all of its subsidiaries put together, is there exposure to any other US bank?
No, there is not. I mean, we do have WildWorks as a subsidiary as well, which has some exposure to very limited exposure. I mean, we're talking about $1 million or so, 8-10 crore rupees between two banks, but they're established banks like Wells Fargo. So there's no concern seen over there.
Okay. What about the business for two of these subsidiaries, Kiddopia and MediaWorks? Any kind of challenges that you're facing right now? Any job cuts that will take place at either of these subsidiaries?
No, actually, both of them are in very good shape. Both are growing very well. As we've discussed earlier as well, our Kiddopia business is starting to, pick up good steam. So, we're actually seeing very positive momentum. And same goes for the MediaWorks, DataWorks, AdTech business. We continue to see good potential. So the business is performing very well in both these companies.
Okay. So you're saying no job cuts, right?
No, absolutely not.
Okay.
If at all, there will be additional hiring that we will be doing.
Okay. Would you by any chance know what is the exposure that the entire Indian startup community has to SVB, just to understand some ballpark numbers?
No, I haven't been able to get a grip on it because there's a lot of chatter around the place. But unlike us, we have to publicly disclose our exposure. There's more hearsay. But my understanding is that there's a lot of companies in the Indian tech startup space who are impacted at different levels and different scales. Just that this overnight may give everyone a lot more confidence about the future.
All right, Nitish, absolutely. And I think, it's a clear statement that all depositors will be, all deposits will be made whole, which I think is what is giving you and others a confidence. Thanks very much. And you're right, last time we spoke, which was early March, you did say that both esports and Kiddopia are expected to do very well in FY24. So you're sticking with that. No real sort of fallout. Hopeful you recover the money. So that's a cautiously optimistic way of looking at things, and perhaps rightfully so. Thanks very much for joining us. We'll take a very quick break here with the news that the market is up 50 points, which means that we are about 50 or 60 points off the day's high. Let's just have the Nifty up So the day's high has been made, last hour and a half odd high has been made at 17,529 hour actually that we've been trading for. 17,529, we're at about 17,461. So a little bit in terms of pullback is what we've seen. Market breadth also flipped. Advances were more than declines. They became even, and now we got about 1,400 stocks on my screen which are lower and about 655 stocks which are higher. So it's been a complete crossover. This is the broader market which is under some pressure. Mitesh will be with us next to talk us through some technical trading ideas. Stay tuned. We are back after a break. Okay, welcome back. We're up 50 points. As I've been saying, we're about 50 or 60 points off the high point of the day. Mitesh is with us. Mitesh, you were, when we spoke earlier, you were saying on a gap up sell. So that trade has worked out, 50, 60 points off the highs. What now?
I think it's a very choppy market. Despite the fact that we've spent only about an hour, we've had a candle which has already covered more than 150 points, and on two occasions, I would say. So I think the idea is that 170, 520 is the best bet to be short. If you are a very risk-averse kind of a trader, take a very tight stop at 17,565, which is where the intraday averages are placed. Or you might want to add around 17,600 and take a positional stop at 17,650 plus level. But otherwise, this is not a market to go long. So on bounces, try to get some into put option positions. I think that's a better way of trading because the futures will have a lot of volatility given the fact that on an intraday basis, the choppiness is extremely high. And otherwise, try to trade with stock-specific biases. So I think we are having some put options on the index, but otherwise it's more of a stock-specific positions for us.
Okay, by the way, I just want to mention that the mid-cap index is really selling off. So, that just goes to show that this market weakness perhaps is not done just yet. It's almost 1% lower now, and a lot of vulnerable names, whether it's, something like an HCC, BHEL, South Indian Bank, JP Power, NFL, all down anywhere between 3 to 6 odd percent. And Yes Bank, of course, for reasons well known, a couple of others as well. Sequence Scientific down 5%. But quickly, Mitesh, on to individual stocks. Anything in the mid-cap end of trade that you would say take a short call on this morning?
So, Sonia, not exactly mid-cap, but TVS Motor is something, which could possibly be getting into a corrective mode. The last pivot low was around 1,060, 1,062 levels. It's trading at 1,064. So if it breaks 1,060, maybe by 2-3 points, take a short with a stop just about 1,075 and a target of 1,025 can be looked at. And Power Grid disclaimer that it's a part of my portfolio. That's on the buying side with a stop at 226 and a target of around 235.
Okay, Mitesh, got that. Thanks for the calls. Market is off a good 60, 70 points from the highest levels of the morning. So let's see, it's still very, very early into the trading session. Let's, however, shift the focus to the commodity markets and figure out how they're grappling with the morning after, so to speak. Manisha is here with us. Manisha, good morning. So what do you have your eye on?
Well, the overall commodities as a sector, because we started on a very positive note. The dollar index has come off its high. We did see 7-week highs in the previous week itself after the kind of data that US led out. But with the bank's concerns, we've seen dollar index decline. The tangible commodities have seen some buying come back. That's the dollar index for you, 0.5% of a decline onto that one. And we also are looking at the US payroll data. While it was higher than the street expectation, but not as blisteringly strong as we saw in the month of January. And that clearly has been supportive as well. Apart from that, the US banking crisis now has pushed the Fed into softening hawkish stance, is what the markets believe. So last week, while there was an 80% of a probability of a 50 basis point rate hike, now there is a 70% probability of a 25 basis rate hike. So that's how fast it really seems to be changing there. So when you look at the steel prices, we're trading at an 8-month highs. Iron ore prices trading at a 7-month highs. The Chinese demand also seems to have improved, especially as we are getting into a peak construction season, which begins from next quarter. And then it also is about the expectation that China will announce more fiscal support as it has pledged and reiterated. That is what also seems to be supporting markets. In precious metals, you have gold prices trading at a 4-week high. Silver is trading at a 2-week high. Copper prices have jumped up quite strongly as well. So we are back above $4. Crude prices, which fell 4% in the previous week, also are trading on a firmer note here. Here as well, what else is supporting the crude is the fact that the U.S. oil and gas rig count is now at 590, which is the lowest since June. So there is lower supply that we've seen come in from U.S., much of the record highs that we saw in the pre-COVID era there. But what the street will clearly watch out now is the US CPI data that comes in on Tuesday, and that's going to be the most important event ahead of the US Fed meeting. That's on 22nd of March.
As long as we don't have any more bank failures before that, right? Jobs data was the most important, and then SVB happened. All right, Manisha, thank you so much for the updates there from the commodity universe. Back to equities right now. By the way, some of the Adani Group stocks, ACC and Ambuja, are well off their morning highs. Let's just revisit that story on the group, the promoters of the group, looking to pare down their pledges. Vivek?
Well, absolutely right. As you mentioned, there has been a bit of profit booking from the top. However, revisiting the story in a statement to the media last evening, what they mentioned was that the Adani Group has fully prepaid share-back promoter financing. And, what they're saying is that they have now concluded the full prepayment of margin-linked share-back financing. So most of the promoter pledges that were further invoked, post the sharp decrease as far as the share prices were concerned, has now been prepaid. Now, what they've also done is they've gone ahead and increased the equity as far as Ambuja financing is concerned by prepaying almost $500 million as, the stated intent to reduce sponsor level leverage. Now, what happened is that so far, the promoters have infused $2.6 billion out of the total acquisition value of $6.6 billion for Ambuja as well as ACC. So now the entire prepayment program of $2.65 billion has been completed within 6 weeks. Remember, on March 8 too, the company or the group had prepaid close to 7,374 crore worth of share-back financing.
All right, thanks a lot for that. So Adani Group, all of those stocks are seeing a big relief rally this morning. But ICICI Lombard is the other one on our radar. If you're wondering why, Surbhi has more details on that. Surbhi, over to you.
Hi, thanks for that. So ICICI Lombard is moving in trade today, and that is because ICICI Bank has said that RBI has approved its request for an extension until September 9th, 2024, which was earlier September 2023, to reduce its stake in ICICI Lombard to less than 30%. Now, as per December 2022 disclosures, ICICI Bank has a stake of 48% in ICICI Lombard. Now, following Lombard's acquisition of Bharti AXA, ICICI Bank stake fell below 50%, and it was required by the regulator to reduce its stake to less than 30%. Now, in September 2020, the regulator had given ICICI Bank 3 years to comply with this regulation, which has now been extended by 1 more year. Morgan Stanley says that while the extension provides time to execute what is relatively a large stake sale, the duration of the extension being only 1 year makes it unlikely to result in any durable relief rally in the stock.
Okay, ICICI Lombard there. The market itself is now just about 35 points in the green, substantially off the highs of the day. We'll take a quick commercial break. On the other side, our special segment, it's the economy. My colleague Lata will get chatting with Robert Sorkin of Citi to discuss the impact of the SVB crisis on Fed's rate action and the overall banking world. Stay with us.